There are always exposure risks and liability risks, but certainly incorporating can do good to minimize that.
I'm Maud Léger, and this is the Realtors Conspiracy Podcast, where we crack the code to real estate success. Learn from top realtors, entrepreneurs, and innovators about how to grow your business as we discuss real estate success stories, mindset, processes, motivations, and the key to their success. Check out our podcast episodes every Monday to crack the code to success for your real estate business. Welcome to part 3 and final episode of our special mini-series helping realtors navigate the benefits of incorporation. From financial planning and employment and corporate law, each week for 3 weeks, we are inviting one of those professionals to speak to their particular area of expertise. This week, we are speaking with Andrew Chudnovsky from Ecclestone, Poisson Neuwald Freeman, Corporate and Business Law, about the benefits, risk, and liabilities of incorporating for realtors. As you grow your real estate business and consider incorporation, let's get to my chat with Andrew. Hi Andrew, thanks for joining us on the episode today and welcome to our mini-series on helping realtors navigate the incorporation process. Tell us, from your point of view as a corporate lawyer, what are the benefits of incorporating when you are a realtor?
Hi, well, thanks for having me, first of all. And my name's Andrew. I work with the law firm Ecclestone, and I work primarily with small business owners. And in recent times, there's been an uptick in real estate agents and brokers who are incorporating their practices. And generally, when I talk to clients about incorporating, they usually come to incorporate for one of two reasons, and that is for tax purposes, and then the second is for liability purposes. I guess we can kind of dig into those a bit more.
Yeah, so tell us, from the tax purposes, at what point do you decide to incorporate?
Well, to be honest, I'm not a tax expert, so I do advise clients on the incorporating process. I advise all clients to speak with an accountant, financial advisor from the specific tax purposes for them and whether it's in their financial best interest or not. But generally speaking, the tax benefits of incorporating are deferral of taxes, so paying a lower marginal tax rate on your income. That's not to say that you can avoid paying that tax. You end up paying it down the line when you take the money out of your corporation. But the idea is, generally, if you're making more money than you are spending or you're budgeting for in your lifestyle, then you can keep the money within a corporation and pay a lower marginal tax rate on it and use that money for other purposes, whether it's investments or otherwise.
Yeah, and from the liability perspective, how do you guide realtors with that?
Yeah, so when we talk about incorporating, what you're doing is creating a completely new legal person, and each corporation is viewed the same way a person is, and they're a separate entity to you as an individual. So in theory, if you are incorporated and you own the company, and there's some sort of risk or exposure or liability issues with the company, then that exposure is to the extent of the assets of the company itself, as opposed to you personally. If you're operating as a sole proprietor, then your personal assets become potentially exposed to any liability associated with your business. I said in theory at the beginning because there is case law out there that suggests there are times when you can look past the corporation to its owners, but that is a much more kind of in-depth legal discussion. Just to say that companies that are owned by one person, controlled by one person, have one director, one officer, there's more likely a chance that the courts will look past the company to the owner because the company is in effect just that one person.
Mm-hmm. No, for sure, I get that. What are most common questions you get from realtors when they're considering incorporating and they come to you for advice?
Yeah, well, first is always the cost.
Yes.
First is what it's going to cost to set it up. The second is more about the process, what it means, what the regulations are. Can you have family members involved? A lot of people look to corporations for potential ways to, I don't like to use the term income splitting, but essentially attach income or value to other family members. So they kind of like to ask questions about that. With a PREC, there are some limitations as to who can own shares. Certainly any voting shares or any controlling shares must be wholly owned by the licensed agent. There is room to potentially issue non-voting shares, special preference shares to non-licensed individuals who are direct family members.
So tell us a little bit about PREC and maybe what are rules to watch for. You talk about that family part, but are there any others?
Yeah, the big rule is the controlling shareholder has to be, and not just the controlling, all shareholders who have voting rights must be a licensed individual. There are some naming considerations as well. There are some limits to the type of business you can carry on as. So usually a PREC is an association with a brokerage, and they can't carry on their own brokerage activities unless they're also a registered brokerage. So there are some kind of technical rules depending on what purpose you're using the PREC for.
Mm-hmm. Very cool. You talk about questions you get are the process. So what does the process look like to incorporate?
Yeah, so incorporating is actually quite easy in Ontario. We can get one done in a couple hours, really, assuming we have all the information we need. So usually what I like to do, and as opposed to using, an online service to incorporate, if you're using a lawyer, I would hope that the lawyer is going through some of these considerations with you, explaining to you what protecting your personal liabilities are and setting, why setting up a corporation is important, and the different types of share classes you can issue, and what that means, and what voting means versus non-voting, and special shares, and going through you with the regulations so that you understand. But that being said, once we have the information as to who the directors are going to be, who the shareholders are going to be, what share classes are going to be issued, it's really quite a simple procedure. Sometimes, depending on the size of the business that the real estate agent currently has, we may do what's called a Section 85 rollover. And that the instructions to do that usually come from the tax advisors. But what a 85 rollover is a way to transfer your assets of your personal assets to the corporation tax-free or tax-deferred. And so there's some paperwork involved with that, which is an extra step. And from what I've seen, at least from advice from accountants, is usually it's a transfer of the goodwill of an agent. So you've got client lists and a brand, let's say, associated with your name. That all has inherent value. So the idea is that you're transferring those assets that you own personally to the corporation. Exactly. And so we've seen some agents decide to undergo that process, and some don't. It really depends on the advice of their accountants.
And it would be depending on new agents, established one, they have a name recognition, or?
Yeah. I think that's usually what it boils down to is how much value there is in that kind of intangible asset that they have. I think, it would be less likely to see an accountant advise taking that step because there are fees involved with that for someone who's relatively new to their practice versus an experienced agent who has a big book of business and a recognizable name across their area and stuff like that. So one of the biggest exposure to liability small businesses have is through employees. So usually if you're hiring, whether it's a contractor or an employee or an assistant of any sort, then usually that's a good sign that you're getting towards the need to incorporate in order to protect yourself from a liability standpoint. So that's kind of one of the other than the tax reason, one of the main reasons I've had real estate agents come to me and look to incorporate is because they're growing their team. They might be hiring another agent even, and they're at a point in time where they're assuming a lot of responsibility for the employment of other people, and with that comes associated risk and exposure. So that's kind of the second main reason, I'd say.
So thinking of risk and all of that, what are beliefs to watch for when you're thinking you're going to incorporate?
Well, yeah, I guess it kind of goes to the exposure and liability aspect. There's a belief that if you incorporate a company, all of a sudden you're just not responsible for anything. All your personal assets are protected, and that's just not the case. So I think people should be cautious about assuming that just because they incorporate, they're all of a sudden going to be wiping their hands clean of any potential liability or exposure. As we discussed, the smaller the company, the less involved individuals, the more likely the courts may do what we call pierce the corporate veil, which means look past the corporation to its owners. And then on top of that, there's director liability. As a director of the corporation, you owe a fiduciary responsibility to the corporation, and you have different types of responsibilities within that position. So there are always exposure risks and liability risks, but certainly incorporating can do good to minimize that. And then I guess the only one, excuse me, I can think of off the top of my head as well is there's obviously, if you do have employees or contractors, you have a responsibility to their salaries and their pay, and you can't kind of contract out of that. If the company's low on money, or you're low on funds, you can't avoid paying your employees. So, whether you're incorporated or not, there are still a number of potential exposure and risks.
Yeah, no, for sure. Sounds like the best thing to do if you're a realtor thinking of incorporating is to contact you. So where do we find you?
Yeah, absolutely. I think anyone considering it should talk to a lawyer, whether it's me or otherwise. The best way to contact me is through email, and that's Andrewc at ehpnf.com. And our website is ehpnf.com. So I'm pretty easy to find. I'm sure you'll post the contact, but I definitely would suggest to any real estate agent who's considering incorporating to speak to a number of professionals, including their accountants, their financial advisors, lawyers, because there are a number of other, potential benefits like investing through your corporation, setting up benefits plans. There's a number of other kind of side benefits, I guess you could say, associated with being incorporated that you may not have as a sole proprietor.
Yeah, that's amazing. That's really sums up all the aspects of this mini-series too. So that's awesome.
Great. Yeah, no, I'm happy to help. And if anybody has any follow-up questions, they can definitely reach out to me and I'll do my best to answer them.
Yeah, thank you very much. Thanks for taking the time today and to share all these tips and advice for realtors.
Absolutely. Happy to.
Thank you. Thanks for joining. Subscribe to our podcast, Realtors Conspiracy, today. I hope you enjoyed this special 3-part mini-series of the benefits of incorporation for realtors.